Hi everyone, this is Dan and the future holds crypto. We have seen a very interesting couple of days, and the news have been all over the press these days, and we have talked about a few in the last video. Let's start with President Trump, who was recently on Friday confirmed with having COVID. That was actually a very big news. Probably everybody was expecting for the markets to react faster on that. Looking at the latest news, it seems that after he was moved to the military hospital to be handled there properly, just in case complications arrive, to be on the safe side, basically. It seems that for the moment he's feeling well with mild symptoms. However, this is indeed the really big news, and it is some news that might affect the markets in general. And I think everybody was expecting the markets to react since Friday when they opened. Another thing that was recently surfacing out was the BitMEX scandal. And if you see here, basically the scandal is related to the fact that the CFTC seeks disgorgement of ill-gotten gains, civil monetary penalties, restitution for the benefit of customers, permanent registration and trading bans, and the permanent injunction from future violations of the Commodity Exchange Act. So basically, they were offshore, and they were trying to go outside some of the regulations from US. Looking at another article here, you can see that one defendant went as far as to brag the company incorporated in a jurisdiction outside the US because bribing regulation in that jurisdiction costs just a coconut. The defendant bragged in or about July 2019 that the Seychelles was a more friendly jurisdiction for the BitMEX because it costs less to bribe Seychelles authorities, just a coconut that would cost to bribe regulators in the United States and elsewhere. Well, the fact is that basically they were saying that they were thinking that because they were offshore, the feds weren't going to have them they were not going to bring them in US, but I think that is going on right now. It's a kind of a big scandal, of course, in crypto, but and people certainly have retracted a lot of them have retracted their money from the BitMEX trading accounts. But looking at the markets, from Friday, starting with Friday, haven't reacted a lot, and that's interesting because probably everybody was expecting for the all markets to react, especially for Trump, from the Trump news. But while we did have a small reaction, and if you this can also be seen here on the grid index. This is 40 now. If you look here, we were about 45 before this news happened. So it is a small reaction, but looking at the prices, that's nothing that's unusual in crypto. I mean, these variations are actually very small. People are used even with more volatility, so I don't think the markets reacted strongly yet. And definitely keep this in mind. It's the market sometimes react the opposite of what you expect because there are too many variables in place. So that's why it's important not to from my perspective, speculation alone or trading based on speculation, especially if you don't have any prior experience is not advised. This is why also in my previous videos I mentioned that you should actually go with dollar cost averaging in and out with the exit plan. Because it's important to not to go full in one trade or in one investment, and also it's important not to go full out in one sell. So yeah, the markets haven't reacted. It's nothing spectacular by any means if you look around it. And one thing that I also wanted to mention is that as you have seen in the past, people were hoping that Bitcoin or cryptocurrency in general, starting with Bitcoin of course because it's the biggest and has the biggest market cap, is decoupled from the other markets, but it has shown that especially with big events, it is correlated to the other markets. And while gold recently has went up while the market went down, Bitcoin went down with the market. So keep that in mind. And I'm pretty sure that in time cryptocurrency will decorrelate from the market, and it will be seen closer to gold, so a safe haven. But for the moment we're still a little bit correlated, and with big moves, this is the crypto is affected as well. So for the moment cryptocurrency hasn't done any major move. Some people were saying maybe this is the time when it's getting decorrelated, and that would be awesome. However, if you look here, I'm looking at the Dow Jones industrial average, and we didn't have any change, any big reaction to the news either. So we didn't have any change here as well. And if you look at the S&P 500 and Nasdaq, you will see the same. It wasn't any big move on any market either. So while I would definitely want to see Bitcoin or cryptocurrency decorrelated in general and faster, I don't think for the moment we can say that here. So looking at the some indicators from Trading Central on the one-day chart, the Nasdaq 100 is may fall. This is the prediction based on some indicators here, with more than 8%. It still shows that it may fall. Well, by the way, this is not financial advice. I'm just looking on some data. I just want to present my view on the matter, and or more possibilities that could happen, and maybe you can not be taken by surprise or by emotions because you are taken by surprise, and don't do anything rash because of emotions. So looking at this was actually this indicator showed this before the news. So I don't think any of the news changed this, but it definitely showed this before the news. I remember looking at it, and if I look at the S&P 500, not on the one-day chart, it still shows the same, that it will go down with more than 6%. Dow Jones as well. So basically, because I'm looking on the one-day chart, not the 30 minutes chart, so they are saying that it is still a possibility. I've seen these indicators before. It doesn't mean anything. Just take this and I'm just looking at different possibilities. However, it is very possible that the market hasn't reacted yet. I mean, it definitely hasn't, if you look at it with all of the news going on, but it's not over. Don't think it's over. We'll have to wait to see on Monday. Also, markets can react different than you expect, so keep that in mind as well. But definitely this is not over. Next Monday will be interesting, and actually the whole next week, based on the news that we'll get, it will be interesting to cover and to take a very close look at it, to keep a close look at it. So this is it on the market and the news. So keep in mind that we haven't seen any big news. We haven't seen any big correlation to the big news. There were some movements there, but very small. Even in cryptocurrency, very small. And we had the BitMEX scandal. We had the very big news with Trump. Now, Bitcoin doesn't care. Honey Badger don't care, as Ivan says. But definitely take this in consideration that it's not over. It's not over, and also I don't think you can say that Bitcoin decorrelated because the markets haven't done anything either. So I would say it's decorrelated if the market went down and Bitcoin remained the same. But in this case, neither made any move, any substantial move that you can say that you can take seriously. So that's one aspect. I wanted to talk about another subject that it's really popular when you are talking about cryptocurrency, especially with new people, even young people, but people that most people that haven't went aboard with the fact that cryptocurrency is here to stay, or it's good, or anything like that. So whenever a lot of times when I was talking about crypto in general, I would have got a reaction that cryptocurrency is used for money laundering, and it's helping money laundering across the globe, etc., etc. And this is actually the narrative that was started a lot of years back, and I'm sure that there were a lot of cases with money laundering in crypto, but this is actually not as important or big as you would think, and I'm gonna get a little bit into that, because a lot of people are blaming crypto. No, it's used for money laundering, drug lords, etc. It's bad. Don't think about it. But that's just the BS from my perspective, because because the biggest money laundering are happening with banks and fiat, right? It's not happening with crypto by any means. I mean, it's just a tiny fraction. The biggest money launderers are happening with fiat and in banks. So this is actually recent news. It's banks moved 2 trillion defying money laundering orders. Yes, so keep this in mind. And it's not only one bank. It's a lot of banks. It's J.P. Morgan. It's Deutsche Bank. It's HSBS. So it's HSBC. Sorry, it's a lot of big banks that you know of, that you trust, and people trust. And say, no, I trust banks and stuff like that. Are involved in hugely bigger money laundering schemes than the ones in cryptocurrency. And also the fiat is used, and the cash is used much more in bigger numbers than crypto used for money laundering. So yeah, it's a really big scandal across the world. It's a global one. So with big banks, it's happening. This is basically since a while back happening, But keep something in mind. This is only the thing that they noticed. It's very possible. Of course, it's a supposition, but it's very possible, and I'm sure it is, from my perspective, that this is just what they managed to catch. Probably the sums are even bigger, and other banks are involved as well, etc. But yeah, this happened. So whenever someone tells you that cryptocurrency used for money laundering, keep in mind that the biggest money laundering is happening with in the systems you trust and use daily, and with the money that you think is safer than cryptocurrency. So no, it's not a valid argument, and we're gonna get a little bit deeper into that. Another thing that I wanted to show here is that besides the the money laundering scheme, and by the way, JP Morgan was actually making fun of crypto since a few years back. They were making fun of Bitcoin. There was the CEO said that he would fire anyone in his company that was using Bitcoin and stuff like that, and that Bitcoin is just a scheme. You shouldn't trust it, etc. And then they started their own JP Morgan coin, and are getting on board basically because they also started to have contracts with big exchanges, crypto exchanges. So if you can beat them, join them, and that's what they started to do. And also, I've heard a lot of arguments that the crypto markets are not regulated and manipulated. And that is the case, especially with lower caps currencies, because if you have a very low cap currency, cryptocurrency, it's very easy to do pump and dump schemes. That's why when you invest in bigger ones with more capital, like Bitcoin, which already has a couple hundred billions of dollars, it's much harder to pull stuff like that, right? But what I wanted to show here is that this also happens in traditional markets, and if you don't think it's happening, look at this one. JP Morgan pays largest CFTC penalty ever. It's almost $1 billion, and admits wrongdoing in market manipulation case. So JP Morgan agreed to pay the largest commodity future trading commission monetary penalty ever, and admit wrongdoing to resolve a case over claims of market manipulation in the trading of precious metals and treasury securities, Bloomberg first reported. The case covers 8 years and relates to the practice of spoofing, where traders put in larger order to buy or sell a security with no intention of executing them, creating the appearance of demand or supply for a particular asset. JP Morgan will pay 920 million, which includes 436 million fine, 311 million in restitution, and 170 million in disgorgement. So this is happening on normal markets, guys, and they were caught. But and for JP Morgan, 1 billion is nothing. But they're paying a small price for what they did. This happens in traditional markets as well, right? So crypto, at least in crypto, might have a lot of this too. So let me go here a little bit, where. Oh, this one. Put in large orders to buy or sell security with no intention of executing them, creating the appearance of demand or supply for a particular asset. And probably this is happening in crypto as well, especially on very shady exchanges, where basically the orders are just a database. They're using database transactions, not on blockchain, not public. So they can do something like that there, and probably it's happening in some shady exchanges. This will probably disappear when we will have decentralized exchanges, with public ledger. Definitely, this is why I'm saying that first of all is the fact that some pump and dumps are happening in crypto as well. why it's easier and safer to go to dollar cost averaging in safe assets, like the big market caps, the top cryptocurrencies, like Bitcoin, Ethereum. And I don't care about Tether. It's just a stable coin. They have a 15 billion, but it's just they're printing money. XRP. And I don't like very much Bitcoin Cash or Bitcoin Cash. I don't see why it's still here. It doesn't bring any value. But definitely find a project with a bigger market cap, for lower risk, of course, because if you find a good project from the lower market cap and invest a lot of time to see the team, to see what team has created that, what are the founders doing, who are the founders, what is the community, because community is very important. What is the project? What are the chances of the project in the sense of can they bring actual utility and stuff like that? Of course, even if it's a low cap, it will have much bigger risks, but bigger gains. So of course you'll have to think about that. But in general, if you go on the bigger ones, you should be safer. However, pumps and dump schemes probably will happen here as well. The fact that's why you should dollar cost averaging, because it doesn't matter on the long term. The demand is too high, will be too high to matter. But I just wanted to show you that these things are happening at a much bigger scale in normal markets. So and going back to money laundering, the narrative has started since a few years back that cryptocurrency is used by criminals to do their money laundering. And to some degree, I mean, it surely has been used. I mean, there are pretty clear cases. However, looking at what I think, keep in mind what I showed you earlier. This is peanuts compared to what the big institutions, banks are actually doing there, and the sums they are using to launder with fiat, not crypto. The narrative is that the narrative built around this is that it's easier to money launder with cryptocurrency because you don't have to show your identity. But I want to show you this article, and actually that's it's something that I was also thinking and looking on different sources. This narrative has been built that crypto is easy for money laundering, but I'm not sure if this was done on purpose from the beginning, to attract people to criminals to money launder here and then catch them, or they actually thought that at the beginning, and now they are much better of actually using the blockchain with the public blockchains to catch the criminals that did this. But look at here, we're on the MIT technology review site, so it's from MIT. It's a trustworthy source. Just to make sure that you guys see it's a trusted source. It's a very important thing to get your mind around this, because and I'm gonna go through the article a little bit. I noticed to people using Bitcoin for illicit purposes, you can run, but it's getting a lot harder to hide. Law enforcement officials are using Bitcoin public ledger, called the blockchain, to follow the digital money and track down suspected criminals using it. Yeah, well, you have a public blockchain. You can use it. You have every transactions there, all the history. the most popular cryptocurrency, Bitcoin, has helped fuel the rise of ransomware attacks, extortion schemes like the recent WannaCry cyber attack. This is from 2017, so it's not necessarily very recent. In which hackers hold the contents of a victim's computer hostage until they get paid. Criminals can use Bitcoin to collect ransoms easily without having to reveal their identities. The currency has also been associated with online drug sales, money laundering, and sex trafficking. So, but while Bitcoin users can withhold their identities, they can avoid revealing other information that can be used to investigators. Every Bitcoin transaction is recorded on the blockchain, a publicly accessible record of all transactions made using this currency. Blockchains provide a really useful source of truth, says Jonathan Levin, co-founder of Chainalysis, which develops software tools for analyzing blockchain data. Its products can help investigators draw inferences about how people are using the currency. Chainalysis combines its analysis with other publicly available information to identify users through the unique strings of numbers they use in the blockchains, called addresses, and then map how they move funds around. This technique can be used to do things like identify the Bitcoin exchanges where the users of gambling sites are converting their bitcoins into dollars. Chainalysis tools are clearly valuable to criminal investigators. Be very mindful of this. Since 2015, the company has supported investigations by the U.S. Internal Revenue Services, the Federal Bureau of Investigation, the Securities and Exchange Commissions, the Drug Enforcement Administrations, Immigrations and Customs Enforcement, and Europol. In most cases, says Levin, investigators turn to Chainalysis when they already have some kind of lead, like a Bitcoin address they found among a suspect's possessions. If they can determine that the suspect is using a particular exchange, they can use a court order to get more information for that exchange. And this is something that you have to pay attention to. The government is also interested in tracking the flow of funds of the blockchain to determine whether the merchants that accept Bitcoin are reporting it and paying proper taxes, says Danny Young, founder of Blockseer, which also develops blockchain analytics tools and supports law enforcement investigations. Cryptocurrency exchanges are becoming customers of analytics firms too. In many places, it's unclear to the degree to which exchanges are required by law to know their customers and make sure they aren't laundering money as is required of traditional banks. By the way, look at BitMEX. But it's difficult for exchanges to open bank accounts if they don't understand who their customers are. And if the government is able to see the criminals are using certain exchanges, the exchanges want to be able to see that too. The news isn't all that good for law enforcement, though. There are ways to confuse investigators and use the so-called mixed services which take bitcoins from many users and mix them with up before sending them back out to different times. Most important, some newer cryptocurrencies, preeminently Zcash and Monero, are designed to conceal the information that Chainalysis, Blockseer, and others use to follow money. First of all, it's the blockchain is public. You have the information that I read through a couple of seconds back. So the fact is that using this information, they have gotten Chainalysis and the government has gotten much better at tracking down, because they will use the public information on the blockchain and then correlated with the exchange information, because at one point you will have to move your money or Bitcoin to an exchange to transform into money, right? So at that point they can make the connection. Of course, there will be ways, as they said in the last part of the article, where they can still be some methods to confuse them further, but of course the process will they will get better to find to track the people down. Also, when it comes to privacy coins, it will be interesting to see how they evolve in the when regulations come in, because they are coming. with no exception. I mean, there will happen, and probably soon, from what we have seen in the news in the latest couple of months. So this is what the important fact is here that you need to understand is when people are saying that cryptocurrencies, or whenever they are dismissing any cryptocurrencies in general because they are used for money laundering, that's a bullshit argument. First of all, because if you look from a broader perspective, the biggest money laundering is done in fiat, and within the institutions that people usually trust, like big banks. I just showed you that. And the other important factor here is that with blockchain, with the biggest cryptos in general, the information is public, and they are getting much better at actually using that information to track down criminals. So while certainly it might be, they will find some other use cases, this is a new asset class, and there will be people finding different methods. Inventive people finding different methods to do money laundering in anything. Dismissing an entire asset class. By the way, this is a new asset class, and it's in the newest asset class that appeared in history. And this the last time it happened, it was more than 100 years back, and I think it was the stock market. Dismissing an entire new asset class and an entire new technology that could and will change the world as we know it. It's not very mature, and you have to take a deeper look into it. Okay, so I think this is it from the money laundering perspective. Let me see. No, this is it for an entire video, and I hope that you found this video useful. And if you did, please like the video and subscribe to the channel, share it with your friends and family. And see you in the next video. Thank you very much. Have a nice weekend.